looks like we've got our group here. Thank you all so much for joining us this evening. We are about to embark on a great conversation around the changing student loan landscape. There's so much going on. And so I'm so appreciative of our speakers for joining us tonight and our partners for helping to bring this session together. I think everyone will really enjoy and appreciate their perspectives. So we'll do introductions in just a moment here, but first, as a reminder, just by being here today, you have been automatically entered for a chance to win a $1,000 scholarship giveaway. So thank you. The winner will be notified via email within the next 24 hours. So keep an eye on your inbox and don't forget to check your junk folders. Also, by participating in various polls that will pop up throughout the session, you'll be entered to win one of several $50 Amazon e-gift cards. So again, participate, be part of the conversation with us, and you have the opportunity to win. The conversation is being recorded and will be sent to everyone following this. But we do hope that you'll stay engaged and participating throughout the conversation. So also want to make sure to thank Preb's Foundation and North County Philanthropy Council for helping to spread the word around this conversation. The way that this evening will go is we'll start with some introductions and then we will have a dialogue here. We'll walk through what's changing and why it matters. We'll talk through your options, ones that you might be aware of and things that possibly you haven't considered yet. And then we'll wrap up with how to plan ahead and what's next and how to make sure that you're kicking things off on the right foot. You'll see you should have access to chat and Q&A, so please drop questions throughout. A lot of you guys submitted questions in advance of this conversation, so a lot of what we'll be talking about will be based off of what you've already submitted, as well as perspectives as they've continued to change over the past couple of weeks. But we will leave time at the end for additional Q&A, but please feel free to drop that in throughout the conversation so that we can make sure to really address all of your questions and concerns. But first, let's meet this wonderful group. So Neville, I'll let you kick us off and would love to really understand your background, and why. Like, why is this something that you're interested in, passionate about, and why do you want to join us this evening?
Well, thank you. There's a lot of uncertainty out there right now, and student loans is certainly a area that's tough to navigate. It seems there's a lot of moving parts. I'm a firm believer in education as a great leveler. I was blessed to have an education that helped afford me the gifts and opportunities that I have. I don't have to go into my birth story and all of that, but the educational system is in need of an intervention, and supporting that, funding that is a critical part of that. And so that's why I'm here. Secondarily, thanks to Kellie for agreeing to do this as an expert, and thanks to Ascent, because I believe in your model of not just a loan, but student success. And I can speak to that more later, but that's my why. Education matters. It matters now more than ever. There's a lot of uncertainty and we need to navigate it. And if we can resource you to do and make a better informed decision, then that's why I'm here.
Amazing. And thank you for being here.
Thank you.
Kellie, what about you?
Yes, thank you. Hi, everyone. I'm very honored to be here this evening. My name is Kellie Nehring, and I am the Director of Financial Aid at the University of San Diego. I am here tonight because I absolutely love debunking financial aid myths. I know that the financial aid process can be very daunting, and honestly, financial aid has a negative reputation. So I try to make financial aid fun, accessible, explain the process. I mean, I know that it's challenging and I know that it's confusing, so I really am here to help folks understand that there are people behind the screens, and we are here to help you, and that, you know, financial aid is accessible as long as you follow the steps. And I really want to help folks try to find as much financial aid as possible in order to attend the institution that they choose, or, you know, choose the path that is best for them. I know that a 4-year college experience may not be for everyone, and financial aid is here to help with a 2-year path, a 4-year path, perhaps a year off and then going back to school. whatever the case may be. So I'm really happy to be here and looking forward to the conversation.
Thank you. Your perspective is invaluable. So we really appreciate you being here this afternoon, evening. I'm in central time zone, so I'm going to keep saying evening, but I know we're all over here. And my name is Allie Danziger. I'm the SVP and GM of AscentUP, and also the head of product and brand marketing at Ascent Funding. Ascent Funding is a innovative private student lender that really thinks beyond just student loans. We really are committed to helping students plan, pay, and succeed. And so I'm here because I am deeply passionate about helping people get the best out of their life. And that is not possible without understanding how to pay for things, whether that is education. And sometimes it's not the most traditional path, as I think many people know. So I have the fortune to lead a team that doesn't just help the organization with lending, but also with all of the wraparound support that students need to succeed in school and after school, helping them get internships and then jobs, which is something that all of our borrowers have access to. So super excited about this conversation. And before we dive in, I would love to hear from our audience. So we want to know now, what's your why? Why are you here this evening? Why did you show up? I'm going to launch a quick poll here. So please participate and tell us what your main goal is for attending this webinar. Is it to understand the latest changes to student loans, learn how to reduce your borrowing, get help comparing options, find the right repayment strategy for you, or explore scholarships and financial aid? I'll give it a few more seconds here.
It's a false choice answer, right? You got to pick one.
You do have to pick one, yes.
I can't vote, but I'm struggling.
We're still getting some votes in, so I'm not going to turn it off yet. There we go. And remember, by participating, you are entered into one of our Amazon gift cards. All right. Can you guys see those results on the screen or no?
Not yet. Not
Okay.
yet.
So, oh, I click this share results. There we go. So, 33% want to understand the latest changes to student loans. And second to that are explore scholarships and financial aid options. So this is going to absolutely spark your interest. So thanks for being here. That is what is already on the agenda. And again, please make sure that you drop additional questions into the chat or the Q&A like is already happening, so that we can make sure that we're addressing your specific questions. I've got one more poll question here. And we want to know how confident you currently feel in your understanding of ways to pay for college, including student loans. Let me pop that one up here so we can hear from you and how you're feeling. Very confident, somewhat confident, or not confident at all. And of course, our goal is to make everyone leave feeling very confident. All right, this one was a little bit easier for you guys to answer quickly. About half of you are feeling somewhat confident, 15% very confident, and the rest not feeling very confident at all. So we are going to move everyone into that very confident place this afternoon, evening. And again, please drop those questions and comments in so that we can make sure that we are addressing your specific questions. All right, so with that, let's get into the meat of this all, and talk about what's happening. So Kellie, I'm going to have you walk us through what's actually changing and what students and families really need to know right now.
Absolutely. So I actually had a live presentation today. Well, not live, this is live, but in person, if you will. And folks were commenting on the financial aid world. And I said, even bad publicity is good publicity, because with FAFSA simplification, which happened last year, folks that had never talked to me about financial aid, mind you, I've worked in financial aid for 20 years, were asking me about financial aid. My friends, my family. I mean, financial aid was in the news, in the media, everywhere. And so everyone was talking about it. So in a sense, that's a good thing because finally people were actually talking about financial aid. Granted, the media was very negative because the FAFSA simplification was a nightmare. I will say that. But at least people started talking about it, started reaching out to financial aid teams, started talking to folks on campuses. So in that sense, it was really a good thing. FAFSA simplification, in hindsight, was easy compared to what is on the horizon when it comes to financial aid and the student loan world. So I know that we have folks out there that perhaps are starting this fall or perhaps are starting in later years. So if you are a student that is going to be starting this fall, you're in a little bit of a different situation than students who may be starting in the fall of 26 because all of the loan changes that just came down, the new federal loan regulations are going to be effective July 1st, 2026, which means they're effective for the 26-27 academic year. So if you are a student that is starting this fall and you borrow a loan, let me preface that with you borrow a graduate plus loan or your parent borrows a parent plus loan, then you will be grandfathered in to the way it is now. So if you borrow a loan in 25, 26, that meaning the academic year, a graduate loan or a parent loan, the rules, the changes won't really impact you if you plan to borrow in subsequent years. If you won't be a student until the fall of 26 or beyond, then these new rules will affect you. If you're going into a 2-year program or a 4-year undergraduate program, then you're not eligible to borrow a graduate plus loan, so that doesn't impact you. That's for graduate students. If you are going into a graduate program and you are planning to use a graduate plus loan, that program will no longer be an option for you. Let's put a pin in that. With students who are going to be in undergrad, your parents will be offered a parent loan. Parents can still borrow a parent loan, but there will be a cap on it of $20,000 per year. And just a little sidebar, these are the rules that are in place right now. Could they change in a month, in 6 months, in a year? Absolutely. So what we know tonight, we will share. Of course, things could change. So with a parent loan, parents can still borrow. There's just a cap on it. And that's challenging for schools that are very expensive. USD, for example, we are a big investment. Our cost of attendance is around $90,000. So yes, we're going to be very impacted with this. But all schools don't have that high of a cost. And so schools that have a lower cost of attendance may not be as impacted. Now, there are thousands of schools across the nation, and every school has to abide by these new federal regulations, which means every single school is looking for an answer when it comes to helping students afford college. So right now, schools are currently seeking ways to make that happen for borrowers. That could mean an institutional loan through your college. It could mean a private loan through a private lender. And it's funny, financial aid professionals who have been in the industry for many decades are kind of not giggling, that's not the right word, but definitely commenting on how loan borrowing is coming back to private lenders because before federal loans have always been there, but private lending was used to be very popular because schools were able to offer private loans and federal loans. Years ago, federal regs changed and schools were legally required to only offer federal loans. Now the pendulum is swinging back again and we are able to offer private loans. So those partnerships are already set up. There are a lot of lenders out there. Schools are going to be doing everything they can to help students pay for college. So I don't want you to think that these regulations mean, oh, I'm out. I can't make it happen because we still want it to happen for you. And we're going to do everything we can to help with that. I could go on and on. I realize we have a lot to cover. So Allie, I'm gonna have you keep me on
Yeah.
track.
No, that's a great start. We did get a question in. How do student loans work when one applies each year? Is the monthly payment due after graduation a combination of all loans? So if you can just get a little nitty-gritty on how it actually works, I think that would be
Absolutely.
really helpful.
Yes, yes. And Allie, I don't know if you have a sense, are all the folks with us this evening pursuing an undergraduate path?
I don't know.
Okay, so we'll talk about both. We'll talk
Yeah,
about both.
we can talk about both. I would imagine we have more undergrad than grad, but you know what, everyone, if you can drop into the chat where you are, that would be really helpful for us to make sure that we are applying the right conversations, and you will also be entered into our giveaway.
Perfect. Okay, so I see a couple of undergrads popping
Yeah.
up there. So
Incoming freshman, rising sophomore,
undergrad.
mostly undergrad. So yeah, let's keep the conversation mostly undergrad focused.
Perfect. Okay, so you do have to apply for financial aid every year. Every single year you're filling out the FAFSA application. I'm hopeful that you have heard of that. That is the financial aid application that all schools use to determine federal financial aid eligibility. Now, depending on which school you plan to attend, they may also have an institutional application, or your state may have a state application. So those are two things you need to check on. But the school will use the FAFSA in order to determine federal financial aid eligibility. So every year you're filling out the FAFSA. It becomes available in October. Typically, there's a priority deadline sometime in the spring. Here in the state of California, our priority deadline is early March, but that could be different in your state. So you want to check on that. So you fill out the FAFSA every year. If you decide to borrow a student loan, there are two different types of federal student loans. One, the subsidized student loan. That means that there's no interest accruing while you're in school. So the entire time you're enrolled, there's no interest accruing on that loan. The other student loan is called an unsubsidized student loan, and there is interest accruing on that loan. So interest starts accruing as soon as you borrow the loan, but repayment on either one of these student loans doesn't begin until 6 months after graduation or withdrawal. So if you withdraw from the university or you take a leave of absence from the university, then your deferment period begins. There's a 6-month deferment period before you begin repayment. Same thing if you graduate. 6 months later, you go into repayment, and then you would be making monthly payments until the loan is paid off. There's no prepayment penalty, meaning grandma gives you $5,000 and you want to put it towards your loan debt. You can definitely do that, but as soon as you make a payment, no matter where you are, whether you're enrolled or in deferment, your status changes to repayment. And then you're in repayment and you have to continue making payments. So you can't just send in $5,000 and then not make payments for 6 months. You're either in a forbearance because you're enrolled, or a deferment, or you're in repayment, one or the other. And if you're in repayment, you absolutely do not want to miss a payment. The feds, they want you to be successful with your repayment. And I should say that the folks that work at Federal Student Aid, which is the department within the Department of Education that regulates FAFSA and federal aid, are amazing people, just like us. And they're here for students, and they have students' best intentions at heart, regardless of what is going on with the administration. Federal Student Aid, they are our people and they are here for students. So please keep that in mind. And they want to help you with your repayment. With the federal loans, the government is not who you're repaying back. You're actually repaying the servicer of the loan, because after you graduate, your loan gets sold, for lack of a better word, to these servicers, and that's who you then repay. They want to work with you. They want your repayment to be successful. There are different repayment options depending on your income, how many years you want to repay, things like that. And you can pick your payment plan so that way you are successful with repayment. Those are the two student loans. Parent loans are very similar, with two big differences. One, there's a credit check on the parent loan, no credit check on the student loans. And parents, you would go into repayment while the student is enrolled. So repayment on the parent loan actually begins 60 days after the second disbursement. So what that really means is the spring semester of the first year. But parents, you can defer it until 6 months after graduation. Interest is accruing on that parent loan, and you can defer it, but technically repayment does begin when the student is still enrolled.
I think that was really helpful. Thank you.
I did see one chat pop up if international students are eligible to apply.
Yeah.
International students are not eligible to apply for federal financial aid, but there are other financial aid programs available for international students.
Great. A couple more questions that have popped in, so we're going to go to those so that we can make sure to really address just the audience. Can anybody get the subsidized loans, or do you have to qualify it for it based on lower income?
Great question. I'm sorry I didn't mention that. So yes, the subsidized loan is what's called need-based. And need is a financial aid word. I mean, folks always say, well, Kelly, I need money for college. It's more of a technical term in the financial aid world where you have to have need, meaning your student aid index is below a school's cost of attendance. So when you fill out the FAFSA application, a number is going to generate at the end called your student aid index. Parents, if you have students from years past, or perhaps when you were in school, this used to be called the expected family contribution. Name change, but it's the same thing. It's really the number that schools use to determine financial aid eligibility. So once you have your student aid index, or what we call the SAI, then a school can determine your need by taking their cost of attendance and subtracting your SAI. So let's use USD as an example. Our cost of attendance is $90,000. I fill out the FAFSA. My student aid index is $20,000. That means I have $70,000 of need. So therefore, I am eligible for need-based funds. The subsidized loan is a need-based loan, and so I would qualify for that. Same example, I fill out the FAFSA, my student aid index comes back at 100,000. Therefore, I do not have need, so I can't qualify for the subsidized loan, but I can borrow the unsubsidized loan.
Thanks. Someone also asked, is it a good idea to pay your loans while in college?
That's a good question. And you'll find as you apply for financial aid and work with financial aid folks, we like to say it depends a lot because every student's financial aid eligibility is different and every student's situation is different. If you are in a situation where you borrow student loans and you have the capacity to start repayment while you're in school, I would suggest that if you have an unsubsidized loan, because there's interest accruing on that loan, so start repayment.
Mm-hmm.
If you have a subsidized loan, maybe you don't start repayment. There's no interest accruing, so it's not really hurting anything. But I would push that conversation even more to say, if you have money to start repayment, why did you borrow a loan in the first place? Is that money that you could have used as a payment plan rather than to repay a loan?
Mm-hmm.
Because schools have payment plans where you can pay monthly, and perhaps rather than borrowing a loan, you could have just paid the school directly with those funds. I realize that that could be a very different amount because sometimes, especially with parent loans, they don't have $80,000 to pay in 10 monthly installments to USD. So they borrow the 80,000 in the parent loan, pay off USD, and then start repayment on that parent loan at a much lower amount than what would have been the monthly payment plan to cover the $80,000.
One other thing just to chime in on that from just a general like budgeting best practice is we often tell people just to pay $25 a month, a very small amount, only so that you can get into the habit of making those monthly payments, which will have to happen, upon graduation or whenever that payment starts. It gets you in the right habits, and it also helps you to start budgeting right away for that. So there's not that initial shock when the payments actually do come due. So you've got to figure out what works best for your budget, but that can always be a helpful first step just to get everything set up the right way.
That is a great point. And there are also repayment calculators online. If you do a simple Google search of federal loan repayment calculator, you can actually play with the numbers, input, 5,000 you borrow your first year. What does that look like? Put in 20,000, after 4 years. That way you can get a sense of what your monthly payments might be. So that way you aren't borrowing too much if oh my gosh, if I borrow $20,000, my repayment's going to be $300 a month. There's no way I can afford that. You know that up front.
Mm-hmm. Yeah. So if you, sorry, a question just came in. If you do the $25 a month, does that trigger repayment?
So with the federal loans, yes, you are either in repayment or you're not. And so you will have to work with them to set that up. It's doable. I just don't want you to send in money when you have it because it's your status that is the most important thing, either repayment or not.
Thanks for clarifying that.
Mhm.
So we have a lot of people who have told us where they are in their education. We've got freshmen, sophomores, so they're in school right now, and things are still going to change for them while they're in school versus our seniors who, may not be as impacted. So can you just quickly address like what people need to think about and how they should make what changes they are going to need to make before things go into place in 2026?
So honestly, there's nothing that anyone needs to do right now.
Okay.
All the work is really falling on the federal student aid for one, and financial aid teams across the nation. There's nothing that families need to do right now because schools are going to find a way for this to work. So, the Graduate Plus loan goes away, the Parent Plus loan has a cap. There are a couple other changes that are not minor, but we're going to find ways to help you find funds. So there's nothing that you need to do now, nothing that you need to do that I wouldn't advise you to do a year ago, 2 years ago. I mean, are you applying for financial aid early? Yes. Are you searching for scholarships the entire time you're enrolled? Yes. Are you appealing financial aid if your financial circumstances change? Yes. Are you reaching out to the financial aid team at your college to make sure you're getting everything that you're eligible for? Yes. But I would tell you to do that at any time.
Yeah. Great. And are you seeing any changes happening on your campus right now because of policy changes?
So we at USD and of all the schools that I have friends at, so to speak,
Yeah.
no one has made any moves yet. So the regulations came down a couple weeks ago, and no one has made any changes yet because one, the changes aren't effective until the 26-27 academic year. So we don't have to have actual policy in place yet.
Mhm.
Conversations are being had, but nothing has been set in stone.
Got it.
We also know that oftentimes regulations change and then a month later they change again. So who knows? This could change again. We're not dragging our feet by any means because setting up new policy and new partnerships will take time, but nothing has been solidified.
Got it. So someone asked a question since we are talking about, so many different things changing and new policies rolling out. They said after 4 years, the student may end up with several federal loans. For repayment, can they all be consolidated so there's one monthly payment, or does someone have to pay each one individually?
I would definitely recommend consolidation, and the servicer of your loan will definitely talk to you about that and offer that. The thing with that is perhaps you have some subsidized, some unsubsidized. If you borrowed for 2 years or 3 years, 4 years, whatever it may be, all of those loans will have different interest rates. And so consolidation will bring you into one payment, one loan, one interest rate, which, I mean, even for me at this age is a great thing. Trying to remember 8 different loan payments is wild. So I definitely recommend consolidation. Just keep in mind that it's going to collapse everything into one.
How do they choose that interest rate when you consolidate?
Ooh, that's a good question. I don't know that.
Okay.
So that
Yeah, I
would be
didn't
a
know. Is it like an
question. Yeah,
average? Okay. Yeah,
that would
we
be a
can.
question for the servicer of your loan. It may
Mhm.
also depend on your repayment plan. But honestly, just like at a school, there are folks that want to help you. And so reaching out and saying, I have all these loans, I want to consolidate, I want to be successful with my repayment plan, help me.
Yeah,
They will definitely help you.
of course. So a couple questions about interest rates and repayment plans in general. What are interest rates like right now, and how do interest rates and repayment compare across federal and private options?
So, because forever and ever we've been legally required only to offer federal loans, I personally don't have a great sense of interest rates for private loans. Right now, for federal loans, the subsidized, the unsubsidized, the Graduate Plus, and the Parent Plus all have different rates, and they're all falling somewhere between 5 and 10%. They change every year, and they're set on July 1st for the upcoming academic year, and they've been hovering between 5 and 10 for years. I have heard, I don't know for a fact, but I've heard that private lenders are pretty competitive because they know that federal loans are set at those rates.
Mhm.
And so they're able to be more competitive. So, kind of as like a sidebar, when I'm talking to parents, I say, maybe you want to check out your private bank or your private credit union. or a private lender because they can be competitive with federal loans.
Yeah. And I'll just say our fixed rates start at 3.09% APR right now. They change monthly. So check out the website regularly. And they, that's a starting point. And depending on, a lot of different factors is where you go. And on Ascent funding, you can get your rate without an impact to your credit score. So you can go check that out and see. I'll drop the link in. So you can just see what would be available to you. And I'll also say private student lenders, they have to be competitive. So they offer a ton of benefits in order, along with your loan. So Ascent, we offer a service called AscentUP that's free to any borrower to gain access to student success services, coaching, training, and then also access to paid internship opportunities that are exclusive just to the Ascent borrower students. So I'll drop all that into the chat in case anyone's interested in learning more. Neville, yeah, looks like you were going to say something. You're on mute if you want to come off.
Yeah, well, it's the perennial problem, right? Thank you. Part of why I'm here is because I think the AscentUP model is pretty unique, and I think it's worth spending a little bit more time on that, because instead of just looking for the loan and then navigating the complexities that Kellie did a remarkable job of helping us sense make of, there's other. The loan itself is a necessary but not sufficient condition for navigating the system. So can you just speak a little bit to the student success model? Because I think that's, for the average Joe that doesn't know anything about it, it's worth a little bit of time.
Absolutely. Yes. Thank you. So we have over 50 hours worth of asynchronous training available to students to teach things on how to succeed in school, like truly how to take notes, how to advocate for yourself with your professor, how to choose the right major for you, financial literacy. So overall, like things like, when it makes sense to start your $25 repayment or how to budget in school. And then also how to get an internship and how to get a job. There are tons of resume resources out there. This is very different than that. This is like all the stuff someone whispers to you and no one ever actually talks about. So how to negotiate your job offer, how to take advantage of informational interviews, but not just how to do it, literally what to say, the scripts, the checklists of how to show up as your most confident self, and then how to transition into that internship or job as confidently as possible. And so we have courses, resources, and then one-on-one coaching sessions, as well as exclusive webinars to actually teach students the stuff that schools just don't have time to teach and employers don't have time to teach. But there is so often this empty middle ground of lessons that nobody talks about. And so many students are left behind if they don't have someone to teach it to them, especially in a hybrid and remote environment where you're not as able to pick up on the workforce habits of the person sitting next to you, whether they're good or bad. So we really spell them out. This is based off of 20 years of training and coaching and hiring entry-level professionals and all of the things that they didn't know, and then working with over 1,000 businesses and what businesses wished that students had known, as well as working with the National Association of Colleges and Employers and America Succeeds for what are out of 3 million job descriptions and job postings, what are employers actually looking for, and how do we best communicate? How do we set students up to best communicate those skills on resumes, on interviews, and when they and then have the skills when they actually show up. So something that I'm super passionate about, and we really believe in bridging that gap for students to make sure that they are successful in school and after school.
Thank you for that.
Thank you for setting me up there. I'm the one asking you guys questions, but I appreciate that. We have had a couple more questions come in, so I'm going to turn attention back there. Someone asked, can you speak to the concept of a student debt strike? Is there anything that you are aware of there?
No.
Okay.
I'll just say,
Yeah.
short and sweet. We'll leave it at that.
Yeah, sounds good. Another question that we got in is other financial aid options to pay for school other than scholarships, grants, and loans.
Grandma. Other than scholarships, grants, and loans. So I'm a huge advocate of students working while they're enrolled.
Yeah.
Whether this is through the work study program or not, the work study program is an employment program that you have to have need for. So I know you all know what that means now, but you have to have need in order to qualify for work study. But there are other employment opportunities on campus, whatever campus you're at, and the employers are offices across campus, so the financial aid office, athletics, whatever it may be. We understand that you are students first, and so we're not really looking for 40 hours. We're not looking for 30 hours. We're looking for 10 hours a week, and that could be a great way to earn money, as I hate to say spending money, but for your living expenses, money, wages that go right into your pocket that can be used for books and supplies and personal necessities, transportation costs, things like that. So that's a great way to not supplement your financial aid because the wages go directly to you, but a great way to have some funding while you're there. Because when you apply for FAFSA, you're applying for all of the grants, all of the loans, the work study, and that funding is designed to cover tuition, on-campus housing, on-campus food, things like that. We do build into the budget indirect costs. So those costs I just mentioned, books and supplies, personal necessities, transportation. So we do offer aid to help cover those costs. But working, whether it's through work study or not, is a great way to put money right into your pocket. If you want to then turn around and pay your university bill, of course, you can definitely do that. But you can also use that money for living expenses.
Yeah, that's great. As we're getting into scholarships and whatnot, going to pull up another poll that we've got for everyone. So, who here has explored scholarship opportunities outside of what your school has offered? Um, Launch this poll here. And we would love to know. You're actively applying, have not applied yet, and not sure where to start. Great. So we've got about half of you actively applying for scholarships. Some have not applied yet, and 30%, 29%, not sure where to start. I'll drop this here. Ascent has given away over $335,000 in scholarships so far. We have an active $10,000 scholarship happening this summer, and you all are already entered into a scholarship giveaway, but scan this QR code to check out a few more of our great scholarships.
I just scanned the QR code. I have a daughter who's a junior in high school. So, yep,
Great.
I just
And
scanned that.
and you can actually double apply because students and parents can both enter to win any of those scholarships.
Perfect.
Yeah.
Great.
Any thoughts on other places to find and apply for scholarships?
I would direct students to the schools in which they want to apply to first. I mean, depending on where you are in your journey, maybe you already have a school, you're already in school, you've already committed somewhere, start there. They definitely have a scholarship webpage, and most likely they're going to list university scholarships. They may even list scholarship search engines, and some schools may have a special tool. And I'm mentioning this because USD has this. It's called Scholarship Universe, where students go in and answer a bunch of questions about themselves, and then the software will match you to scholarships that you may be eligible for. The more questions you answer, the more refined the search becomes, and then you can apply for all of the individual scholarships. Scholarships can be tricky because you have to apply to each one individually. With the FAFSA, you're filling out one application and you're applying for all grants, loans that, the feds offer. But with scholarships, you have to apply for each one individually, and that definitely takes time. The one thing I will say is that donors don't compare notes. So if the scholarship prompt is similar, reuse that same essay. No one cares. Please, please do. And apply for as many as you possibly can. I find that students sometimes think, well, I'll never get a scholarship. There's so many students applying. That's not true. Scholarships go unclaimed, and I wish students would apply more. I know that writing yet another essay can be a big ask, but you can reuse it and try to apply for as many as possible the entire time you're enrolled, because some are 1 year, but some are renewable. And you apply once and then you get it year after year. And you may also want to talk to your financial aid office about how scholarships are factored into your financial aid offer, because we can never give you financial aid that exceeds the school's cost of attendance. So, using USD as our example, if we offer you $50,000, remember our cost of attendance is 90,000. If we offer you $50,000 in federal grants and loans, and then you get, let's say, $60,000 in outside scholarships, that puts you over the cost of attendance. So something has to be removed. We would get rid of loans first. We'll take loans out of your offer so that way your scholarships can come in. But that's definitely a question for your financial aid office, because you want to see how your scholarships will impact your other aid.
A couple questions about FAFSA as we're talking about scholarships too. So, what if you don't think that you'll qualify for aid? Should you still fill out the FAFSA?
I would say yes, because with the FAFSA simplification, which is what happened during the 24-25 academic year, so this past year, they drastically changed the FAFSA, and I think you could get it done in less than an hour. So there's some skip logic in there, and the student will fill out their portion, parent will fill out their portion, and I honestly believe you can do it in less than an hour. And you never know, because if your student aid index is 50,000, but you're going to USD, you still have need. If your student aid index is 0, you're eligible for the maximum amount. And in some cases, there are scholarships available as long as you have a FAFSA on file, regardless of your student aid index. So at least fill it out once to see where you stand. If you fill it out and your student aid index is 900,000, maybe not fill it out again. But if your student aid index is 900,000, but you want your student to borrow a student loan every single year, then you have to fill it out. So I definitely think it's worth it at least once to see where you stand. You never know. You never know.
Yeah, and in the idea of just like opening up your options, you never know. What about just alternative pathways beyond your traditional four-year degree? Like, how would one figure out what the right path for them is?
I don't want to say it depends, because that's just my go-to answer. I feel like this is a conversation that would happen first with the family. I have 4 kids and they're all very different. And I am learning that every student child's path is different. And this whole, like, you have to graduate from high school and go to a 4-year college is not the path for everyone, and that's okay. And some students will go to a 2-year and then transfer to a 4-year, or go to a 2-year and graduate, and that will be their path. Some students won't go to school at all. Some students will take a year off and then, enter school. So there's a lot of factors to consider. And the financial piece is a big one, but I don't think that should be in the driver's seat at all, because there are options out there to help pay for school. And I would hate for a student to not go to school if that's the path they want because of financial reasons. But I also wouldn't want a student to enroll in the fall just because their parents are making them, or that's what all their friends are doing, or that's what the media has told them they need to do, and so that really is a deeper conversation of what is best for the student, for the family, and will help the student be, at the end of the day, healthy and happy.
Neville, any thoughts around that?
I so appreciate that sentiment. Again, at the onset, we talked about the whole educational system is ripe for revisiting, and we all need to make it work for us. And so we have really addressed, for the most part, looking at the chat, the undergraduate experience. There's a few grad students that probably have a question or two that we probably want to spend and lean into. But then again, that's not the traditional system is not the only way to go. That you can find loans for vocational. There's many ways. There's many ways to climb the mountain, right? And so I just really appreciate both of you guys making space for that conversation, so that we don't just slipshod everybody into a single homogeneous track that may not be in their best interest. So that's my only comment, Allie, and thank you for inviting me to riff on that.
Of course. Yep. And we've got a couple more like very specific questions here.
Absolutely.
So I'll keep us in the weeds, and then we'll kind of
Okay.
end at about 7 minutes, and go back up.
Okay.
This one, it looks like the really this question, we got it a couple different ways, but the difference between parent loans and student loans, and when someone would make that decision, the pros and cons of that, and what parents should consider when they are taking out the parent loan.
Absolutely. Okay. So when you fill out the FAFSA application, at the very beginning, the application will determine whether or not your student is considered dependent or independent. And what that means is a dependent student is required to provide parent information on the FAFSA. An independent student is not. If your student, let me say this, there are very specific categories that a student would have to check yes to in order to be independent. For example, you are 24 as of the date you're filling out the FAFSA, you're married, you have a child, you are active duty, you are starting a graduate program. There's very specific kind of questions that you would have to answer yes to. If your students or even parents, if you're thinking, well, my student, they live with me and we have a good relationship, but they pay for all of their own things. They have a job and they pay for all of their own stuff. So, yes, they're financially independent, but for financial aid, they are not. So, if your student checks no to all of these dependency questions, then they are dependent and parent information is required on the FAFSA. So that means when you apply for aid, you would be applying as a dependent student. You would be applying for student loans and parent loans. Schools will offer both. Students, as long as you click through all of the requirements, you get the student loan. Parents, there is a credit check required, but the parent loan is in the parent's name, but it's on the student's behalf. So a parent couldn't get a parent loan without their child being enrolled in an institution and being offered this loan. There's different interest rates and different repayment structures, but it's all contingent on the student being enrolled. If the student fills out the FAFSA and it's determined that they're independent, because let's say they are married, then they would only be offered student loans. They would not be offered a parent loan. This can get kind of tricky when it comes to the cost of attendance because there are federal loan limits on student loans. So for example, when a student is a first year in college, they can only borrow $5,500. And right now, there's no cap on the parent loan. And so we can offer, back to USD being our example, we could offer an $85,000 parent loan if we needed to. There's no cap there because our students can only borrow $5,500. So for independent students, the federal loan limit is a little bit higher than the 5,500, but nowhere near what a parent loan could be. So sometimes independent students will run into a gap, meaning you're maxed out on grants, you're maxed out on federal student loans, but you still have a gap of needed funding. And that's where private lending has come in. Students work, they save up, they borrow money from family, they do scholarships. There's a lot of different ways to do it, but that's kind of the main difference between student loans, parent loans, independent, dependent.
That's really helpful. Thank you for going into that detail. One more question. If someone has multiple properties, but they were all purchased with borrowed money, meaning very much less equity, how does the university see those assets?
So when you fill out the FAFSA, you will be required to report asset information. You won't be reporting the home that you live in or retirement accounts. There's a list provided of what you don't report, but investment properties, business properties, like your bank account information, that is all reported. So I can't answer that definitively. I mean, you would have to look at the FAFSA and I would have to know more about your situation. I'm speaking to the person who asked the question. So again, it depends, but assets are reported on the FAFSA.
Perfect. Thanks. Okay, I do think we've addressed all of our questions. Some people have been asking about scholarships and where to find them. So I would just say there are broad scholarships. So like look far and wide, both with your university as well as online for ones that are broad. And then like some questions about very, very niche audiences. So a creative arts major, like there are nonprofit organizations out there looking specifically for dancers looking to go into psychology majors or whatnot. And so it takes more research, but finding those very niche opportunities that you are perfectly qualified for is sometimes where the right time can be spent. Similar to when you're looking for a job, you can spray and pray and apply to every single job on LinkedIn or Handshake, or you can really find the 5 right job opportunities for you and spend the same amount of time putting the effort into the ones that you're most uniquely qualified for. So, none that I know of off the top of my head to specifically apply towards creative art majors. At Ascent, ours are no scholarship. I'm sorry, the scholarships have no essays, and so they're fast and easy to apply to, which is one type of scholarship. And then there are the ones that, of course, have a more robust application, but probably are more specific to what you're uniquely qualified for. Um, so as we've, kind of wrap up the Q&A, thank you all so much for participating and for sharing your questions. We had a great conversation lined up, but we really, again, wanted to make sure to address the audience here tonight. I would like to ask a final question of just one takeaway. Like if you take nothing else from the last hour of conversation, what do you want to make sure that our attendees take away today? Kellie, I'll start with you.
Just one. I feel pressured to just give one. I want to give 10. Um, I
Take two
would,
and I don't have to speak, Kelly. You go.
sorry.
I said take two and then I don't have to go.
I would say reach out to the financial aid team at the school that you are attending or plan to attend. Under that umbrella is asking them about scholarships, asking about deadlines, asking how to appeal financial aid, if you need additional funding, who to contact for repayment options. Just get to know the financial aid team. Maybe your school has a one-stop student center. You could also start there. But I just feel like people get frustrated about financial aid and then people talk and it just creates this, well, financial aid is so hard and you don't ever get anything and everyone's so mean and then you have to fill out so much paperwork. And while some of that is true, we really want to help you. So please reach out to the financial aid team at the school you're planning to attend or already attending and ask them a slew of questions.
Mhm. That's great. Neville, what about you?
Again, tough. You got to pick a single thing. I think an investment in knowledge pays the best interest. I think that's a Ben Franklin quote, and if not, you can sue me. Today was really about resourcing everybody with a very complex situation. Obviously, the quality of the questions suggested the caliber of the participants. So I just
Yes.
want to honor the attention, the detail, the specificity that they raised. Um, with that kind of discernment, you're going to find the right answers. Just keep asking them
Hmm.
and resource yourself with a large network. There's not a single source that may or may not be able to answer everything, but if you're able to widen that net and be more inclusive and then aggregate all that input and sense make for yourself, for your child, for your future, I think that's the path forward given the uncertainty.
I agree with that wholeheartedly, especially, I mean, just being here tonight, you're already in more of the know than you think you are. And so I feel I agree. Yeah, great questions. You all know how to calculate federal need now, so you're set.
And I'll just say as a final note, starting early. So there's so much information out there. We've said you fill out the FAFSA, apply for as many scholarships as possible, get to know the teams, educate yourself. There's a lot out there, but by starting early, like many of you are, you're not behind anywhere. By starting early, you give yourself the time so that it doesn't have to feel quite as stressful. So bravo, as has been said, for attending. Please keep the questions coming. We will send out this recording as well as a recap of the webinar, but keep asking us what else we can do to support you through this journey, because we'd love to host another webinar, keep posting resources through our blog or through our emails. So thank you all so much for attending. Neville, Kellie, thank you for your active participation and conversation. It's so helpful. We really value your partnership, and also to our partners on this webinar for helping to invite their audiences. Previs Foundation and the North County Philanthropy Council really, really appreciate it. So thank you all. Have a great evening, and we will be announcing the winners of our scholarship and our 3 giveaways in the next 24 hours. So please check your emails. Have a great night, everyone. Thank you so
Thank you,
much.
Allie. Thank
Thank
you.
you all.
Thank you. Bye-bye.